Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is Sunday, the 16th of November, 2025. Time is currently 9:12 a.m. The agenda for today's video will go through indices, commodities, crypto, bonds, that sort of thing. And then we'll have a look at some individual companies chart with a theme. I'm going to go through ASX or go through my ASX high quality trading view watch list. I have 49 companies in that particular watch list. And what I'm going to do is have a look at where the share price is in relation to the 200-week moving average. So sort of combining, in a way, technical and fundamental analysis, because you need to use fundamental analysis to determine whether a company is high quality or not. I do have some screeners. I use those screeners to screen out some companies. 49 companies at this point in time. I have left out a few companies, smaller companies that I do think need a little bit more time to prove they are high quality. What was one of those companies? I forget. I forget right now. But anyway, so 49 companies, 49 high quality companies on the ASX. I won't go through every single one, but I'm just going to look for any sort of opportunity out there right now in ASX in terms of buying some high quality companies for the longer term at pretty good value or just good value. Okay, so before we get to that, let's have a look at indices. We'll start off with the XJO. Pretty bad end to the week, but the XJO is at a really important level, just above 8,600. And that's a nice little support level for this indice. Now, the way I look at support levels is I consider these to be more zones. So this is a zone probably between 8,600 and something and 8,500 and something, but 8,600 is an important level. Around that zone is an important level for the XJO. Now, this area was sort of started percolating or developed back in February. XJO got to this level just before we saw it dropping, and then it really struggled to get above 8,600 for about a month between the 10th of June and then the breakout on the 18th of July. I can see it tried to get above that level, tried on about 8 occasions, maybe even 10 occasions, and finally it got above that level. So that was a breakout. So we don't want to see the XJO fall below that level. That would be a negative technical signal. And I do think there will be a little bit of bounce. I'm not sure how strong on tomorrow, but there will be a bounce. Maybe. We'll say maybe at this point in time. I think the American futures will be very important as well. They start trading just before we open. So if American futures start down, that could be negative for us tomorrow. But I wouldn't be surprised to see a bit of a bounce just because it's hit and it's support level. And support levels, typically you will see a little bit of buying coming in. And the very fact we saw a bit of selling on Friday, again, I think we might see a little bit of buying. Now, just because we have seen a bit of a dip in the SGO doesn't necessarily mean we're really good value right now. And the way I look at this is if you go to the weekly chart, and I'm just going to put in the 200-week moving average, and I'll get rid of the drawings. So whenever the SGO is at near or definitely below the 200-week moving average, I think there's pretty good buying and there's probably value. And the SGO is still well above that moving average. Only once has it gone below that moving average in the past 2 years. And that was during April, during the tariff debacle. So since November 2023, it's been well above that moving average. So there is still potential more downside, but if I ever see it getting towards this particular issue, getting towards say 7,800, 7,900, I think, yeah, I could see it further downside right now. So I wouldn't say there's good value in the XJO right now. And a lot of the rise in the XJO has been caused by the banks. And we'll have a look at the banking sector in a second. And I think this could be a sign of a little bit of, in fact, I would say if you were talking about bubbles on the ASX, you have to be talking about the banks. I think the banking sector is in a bubble right now, and that's where we might see a bit of deflation. I wouldn't say tech sector is in a bubble. I wouldn't say that at all. Anyway, so that's just my thoughts when it comes to bubbles. Anyway, so XJO, 3 down weeks in a row. 1.52, 1.26, and 1.54%. We could see further downside. Not sure how long this little bit of a dip will go. Could go for another week, another 2 weeks, 5 weeks. Could go for another year. This could be the start of a major correction, maybe a 30-40% correction. Who knows? We just don't know because that's the future. We just don't know. And the whole point of technical analysis isn't to forecast the future. Absolutely, it's to improve your odds. It's all about probability, improving your odds. Another way I look at this is before this 3 week dip, the XJ was well above the 200-week moving average. And when it's well above the 200-week moving average, there's just more likelihood of a little bit of downside. And you go through history and you always see that. Just before some big falls, the XJ is well above the 200-week moving average. So it's just more likelihood this was going to happen. Okay, so that's the XJO. We'll go back to the daily chart and we'll have a look at the XSO, not my favorite indice, but small caps have had a really good run. In fact, I'd say small caps have had a really good run for about 6 months. So yeah, since about May, had a really good run, well above this purple box now. So I put this purple box in, not sure how long ago. It broke above the purple box in July, and we've just seen a bit of a pullback. We saw during the week, we saw X or small caps have a good day on Monday and Tuesday, and then roll over as soon as it hit the 50-day moving average or 25-day moving average. So that possibly is a sign of weakness. Possibly. We really don't want to see much more downside, and we want to see a bit of a bounce here. We want to see the XSO going up like that, not down. That would be fairly bad move. You could even put, even though it's fairly short time frame. No, that's the wrong one. You could even put, oops, I've got to press the right button. A little bit of a line there. So that's the current downtrend line. And if it breaks above that, that'd be a good move. Anyway, so not my favorite indice, and there's reasons behind that, but it's had a really good run, nice little pushback. But how much further this pushback has to go, I think we will see on Monday, Tuesday, and maybe Wednesday. And I probably could even put another line right there. Falls below that, that would be fairly negative. Okay, what about the XTO? I expect this one to have had a pretty bad week. By the way, XSO had a good week. Well, actually, no. It was up 0.37, but there was a long shadow. So there was a bit of selling towards the end of the week. If we have a look at the XTO, I expected a bad week for this one because of the banks. Yep, down 2.64%. Still in a nice uptrend. This reminds me of what happened in February and March, the last big dip we had. And these sort of weeks happen all the time. Well, maybe not to this extent, but even if you have a look at the most recent upwards move between December 2023 and February 2025, there were some weeks in that where the XTL was down a fair bit, 2.83% in December, 2.16% in August 2024, and 2.8% in April 2024. Now, the question becomes, because this particular down week moved below the previous low. All these other big down weeks, we didn't see a new low. The lows were higher than the previous low. So this, because it did get lower than the previous low back in September, that could be a sign, a bit of weakness for the XTL. And the other thing I should also mention is I do think there's a way more weakness in the banks, and that will have a sort of a lingering effect on the XTL because how many banks are in the XTL? 5? So they are a large proportion of this particular indice. But the weekly chart still looks okay. Daily chart. Oh, yeah, that's you can actually see how the new low, the current low is going to be lower than the previous low. That is sort of the definition of a downtrend developing. Lower lows, lower highs. Now we don't have a lower high. You could even say maybe there's a bit of a double top here. So there are signs of a bit of weakness in the XTL. Tech has had a really bad run. And that bad run has continued. In fact, this looks terrible. It looks atrocious. Now, in saying all that, there's a few companies within the tech sector that I think are becoming way more interesting. And I might have a look at some of those charts. But 3 really bad weeks, or maybe it's 4. Now, 3 really bad weeks in a row for the tech sector, 4 bad weeks our last 5. So down 4.32%, then up 1.47, then down 4%. 4.45 and 5.36. Looks like the bad weeks are accelerating, so I wouldn't be surprised to see another down week. 6%, down 6%. In saying all that, that's the weekly chart. I'm just going to have a quick look. Saying all that, the XTX did bounce really nicely off the 100-week moving average back in April, and it's right there now. It is right there now. So maybe it's oversold. I wouldn't be surprised to see this significantly oversold. But the other thing is XTX hasn't been around that long. It came into being back in February 2020, around the time of the COVID-19. But I think some of the tech companies on the ASX are looking way more attractive, and this sort of explains why. In fact, if we have a look, if I can find it, here it is. If you have a look at how much it's gone down, yeah, only 18%. I thought it might have been a little bit more than 18% from the highs. So XEX is down 18% from its recent highs. So it's sort of in correction territory. And finally, onto the banks. I am assuming the banks had a really bad week because mostly CBA. So down 6.05%. Now, this has happened in the past. In fact, the last really bad week was in February 2025, when this particular indice was down almost 10%. And then it dropped a little bit more from that because that was during the tariff debacle. But in saying that, this is still in an uptrend. If you have a look at the weekly chart, still an uptrend. You can see breaking out back in December 2023. But this is the banking sector. ASX 200 banks, they're not growing. They're not growing. So all this rise in the banking sector is multiple expansion. It's not financial expansion. There's a little bit of that, but most of this is financial expansion. And whenever you see that happening, eventually the fun times are going to come to an end. And I wouldn't be surprised to see eventually the banking sector go back down to the level it was. You can see how the banking sector was just going sideways for about 3 years, 2021, 2024. I wouldn't be surprised if it went back down to that level. That's probably fair value for the banking sector. Good value back in 2020, and now it's overvalued. So that's sort of the downside we could see for the banking sector. So that's really good. So nice chart, but again, this is not the sort of chart you would expect for a sector that's not growing at all, or growing very little, growing at the rate of inflation, put it that way. What about mining? XMM. This is another indice or another sector where I would not, there's no high quality companies in this sector, in my opinion. But in saying that, the mining sector was in a downtrend, broke out back in July. Beautiful, I wouldn't say V-shaped recovery, but a beautiful run for the mining sector in the past 3 or 4 months. We had a down week last week, but a really good week. So up 3.87%. So it wouldn't be surprising to see a fair bit of rotation from banks into some of the miners. Don't understand why iron ore companies are running because iron ore price is actually a bit weak. But lithium going on a big run, gold's going on a run. So lithium and gold are going on runs. So any mining company that's mining lithium and gold has had a really good time. So this chart looks pretty good. One of the best looking indice charts on the ASX. Is that an all-time high? In fact, this indice goes back to 2006. You can see that the mining sector is run by cycles, and the bottom of the cycle was 2016. You could have bought BHP for like $15, I think. And then it's gone on a really nice run. And now what's really leading the run in mining is really gold at this point in time. Okay, so that's the Australian indices. What about New Zealand? New Zealand. Oh, New Zealand got to an all-time high during the week. Oh, that's amazing. So that was on Thursday. So way more strength in New Zealand market than Australian market with an all-time high reached on Thursday before a bit of a drop on the rest of Thursday and Friday. But this chart looks really good. No problems with this chart at all, even though it's dipped the last 2 days. We see dips all the time. In fact, if you go back through the new NZ50, whatever it's called, over the past 6 months, 5 months, you can see 3 day drops all the time. The most recent was October 10th, 13th, and 14th. The New Zealand or the NZX50 went down 0.76, 0.86, and 0.56 in 3 consecutive days and then rallied again. Okay, so unfortunately, this is a better looking chart than most of the Australian indices. There you go. Never thought I'd say that. Now on to USA. Nasdaq up, Nasdaq up. Now, the interesting thing about some of the American indices was the intraday rally, and then it sort of petered out. So if you have a look at the 1 minute chart for the Nasdaq, yeah, it started down a fair bit. So it was down 1.53% on open, and the low was reached in the 3rd minute of trading, and then we saw a really good bounce. The highs of the day were reached at, what's that, 2.5 hours after opening, and then we did see a little bit of weakness during the day, but not a lot. So a lot of buying coming in the first 2.5 hours of trading, and that was about it. So it did peter out during the day, but that led to a nice one-day candlestick. A nice little possible reversal. Uh, this chart doesn't look that bad. So we keep hearing the bubble's bursting, a massive bubble, but you can't really see that yet in the Nasdaq chart. And again, Nvidia releases results this week, and that's going to be very important. Although this is going to be weird to say, the expectations are Nvidia will beat expectations. Well, maybe the best way to say that is expectations are Nvidia will beat guidance. So if they don't, that's going to be negative. And even if they do, there's still a possibility it'll be negative reaction for the market, but we'll wait and see. For the week, down slightly, only down 0.21%. There you go. So the weekly chart looks pretty good as well. No sign of weakness yet in the Nasdaq. So I'm not sure where all this bearishness is coming from. It's weird. It's really weird, all this bearishness, but I think it's maybe misplaced at this point in time. There's no reason to be bearish right now. Dow Jones, same sort of thing. In fact, Dow Jones was up 0.34% for the week. Bit of a doji there. If you have a look at the 1 minute chart for this one as well. Yeah, so a lot of selling on open and then a bit of buying coming in, but that buying came out. So maybe you could say this was more of a dead cat bounce than anything else. But if you have a look at the daily chart, it's right on the 25-day moving average, and that has been acting as a bit of support for about 4 or 5 months. So nothing untoward when it comes to Dow Jones Industrial Average, and the weekly chart looks fine as well. What about the Russell 2000? What about small caps? A little bit more weakness in this one. 3 bad weeks in a row, down 1.36, 1.88, and 1.83% in the most recent week. So a little bit selling in small caps, but this was coming off an all-time high, I think. Yep, all-time high 3 weeks ago. And yeah, yeah, there was a little bit of buying. In fact, the Russell 2000 was up. I assume we're going to see the same signal here. Yeah. So a lot of selling on open, then buying came in after about 3 minutes. Reached a high at about 3:30 a.m. local time, about 2.5 hours after trading began, and the buying sort of stopped at that point in time. Daily chart doesn't look, it does look like it's rolling over, doesn't it? So I'd like to see a really good bounce here. Not as good a chart as Nasdaq and Dow Jones, but I want to see a bit of a bounce here. Okay, so we're looking forward to see how the futures there are looking like tomorrow morning when we start trading. What about international indices? We're starting off with Nikkei. Now, Nikkei has gone on a really good run, really spectacular run, and you'll be able to see that when we look at the weekly chart. Now, even though it was down for the week, maybe. Oh, no, it's up 0.2%. In fact, you can see the run that the Nikkei has gone on just by looking at the weekly chart, well above. In fact, let's put the 200-week moving average, well above the 200-week moving average. So I would imagine there is a greater chance we might see a bit of a downside for the Japan or the Nikkei just because of this particular chart. Greater chance you might see a pullback, but if it goes sideways for a little bit, I wouldn't be surprised with that either. But the daily chart looks good, weekly chart looks good, but again, greater chance of a bit of downside because it's gone on such a big run. Big run. Hang Seng, this one looks pretty good. No problems with the Hang Seng at all. It's looking nice. Looks like they had a positive week as well. And they were up 1.26%. Weekly chart looks good. Daily chart looks good. No problems with this indice. I was going to say these indices, but this indice. What about the DAX? Now, the DAX had gone on a really good run. It looked like it was maybe a bit of weakness coming into the DAX. The downtrend or the uptrend was looking like it's coming to an end, more likely sideways movement, trading in a range between about 23,200 and 24,800, and no signs of that range coming to an end. So I think one of the reasons behind this, it could be just the DAX had a really good run, and this could be just this particular indice taking a breather. We'll confirm that when we have a look at the weekly chart. So no, it might have been slightly lower for the week. Let's confirm that. Slightly lower for the week. Yeah, oh no, it's up 1.3%. There you go. And if we have a look at the 200-week moving average, yeah, so you can just see this. The DAX was well above the 200-week moving average, and now it's just going sideways. And that's actually quite healthy. You don't want to see a lot of selling coming in, and we haven't seen that. So DAX still looks pretty good. and maybe just in a breather stage, taking a breather. What about the FTSE? We'll have a look at the weekly chart for this one. This one looks pretty good. Now, a little bit of indecision during the week, which is understandable because this particular index is well above the 200-week moving average. So again, wouldn't be surprised to see a little bit of downside. And maybe today or this week has seen the first signs of that. A bad end to the week, down 1% and 1.11%, but still coming off all-time highs, which were reached on Wednesday. And finally, the TSX. Now, this was up 0.24%. So this is why I think maybe we'll have a slightly positive day because this particular indice was up. If we turn our attention to the daily chart, looks like they were up. Yep. So TSX was up for the week. So all these other indices showing a little bit of strength when the ASX was not as much. If you have a look at the weekly chart, yeah, the TSX was up 1.38%. And this sort of similar to the Nikkei and the FTSE, that the TSX has gone on a really good run and you expect a bit of a breather. And I think it's going through that breather right now. It's sideways movement for about 6 weeks and still well above the 200-week moving average. You can see if you go through the past, yeah, so the TSX falls below the 200-week moving average on occasion, and it's well above. And the last time we saw it this far above the 200-week moving average may have been just prior to the weakness before interest rates, but yeah, you don't usually see it. The TSX go on this sort of run. So I would expect a bit of weakness here, but the very fact it's going sideways for about 6 weeks shows me there might be a little bit of strength in the TSX remaining. And again, the biggest company is a bank. Second biggest company is Shopify, which I do own. And another company, big company on the TSX is Constellation Software. And I'm thinking of buying that because it has pulled back a fair bit. Okay, now onto commodities. We'll start off with gold. We'll keep on the weekly chart and we'll keep in the 200-week moving average. And maybe you could use the same thinking. Gold is well above the 200-week moving average. When it falls below, maybe good buying, but it's a commodity. Up for the week, 2%, not surprising. But in saying that, gold did end the week on a sour note, down 2.13% on Friday. And I'm wondering if most of that was after trading had finished on our trading day. Let's have a look. So trading finished here at 4,180. Yeah, so gold did fall about 2% after trading finished. So I would expect a bit of weakness in the gold sector tomorrow. Tomorrow. Yeah, there we go. But still no complaints with this chart. Now, probably the only complaint I might have is we saw a high reached sort of the 17th, 21st of October. Then we had a pullback, and then we saw gold going on another rally. Now it looks like the most recent high didn't get above the previous high, so this was not a higher high. So this could be a sign that there's a little bit of oomph coming out of the gold sector, and maybe this particular short-term uptrend has come to an end. Doesn't mean the overall uptrend has come to an end, but this particular uptrend has come to an end. And you can see gold went sideways for about April, about 5 months between April and September. And then it broke out on the 2nd of September. And that's when we had a really good run. So after a really good run like that, we do expect eventually it to go sideways at the best, at the worst. No, at the best. Silver. Oh, silver looks like a bit of a double top almost. Got to an all-time high, maybe. Am I assuming a little bit too much? I'm assuming that's a. Oh, yes, got to an all-time high on Thursday. Now, that was a bit of a doji day. You can see there's a bit of a range between the high and low of the day and finished right in the middle after a nice little run. And then we did see silver pull back 4.67% on a Friday and looks like a bit of a double top there. Looks a little bit better than gold, but a bit of weakness on a Friday. Overall for the week, though, it was up because the start of the week was really good. Up 5.28% for the week, but we have seen another long shadow above the main body. So that's happened 3 of the last 6 or 7 weeks. So once silver gets above about $50, we do see a little bit of selling coming in. So maybe a little bit of weakness showing in silver. What about copper? Copper is a big meh. A big met for me. Let me have a look. Uh, maybe a slow uptrend developing. Yeah, I'm not really interested in any copper companies right now. And this chart is like a big nut for me. No significant uptrend at this point in time. The one thing surprising me is iron ore. We have seen some of the iron ore companies go on a bit of a rally and nice developing uptrends, but you don't really see a corresponding chart for iron ore. In fact, iron ore has pulled back the last few weeks down to just above $100 after being 108 a while ago. So not the best looking chart for iron ore. And when I say iron ore companies, a good one is Fortescue. This chart actually for Fortescue doesn't look half bad. So a little bit of differing opinions when it comes to charts for iron ore and also Fortescue. What about uranium? Here we go. Uranium. This one's all over the place as well. A lot of volatility in this one. Looks like it's trading between a range of $24 and 28.50. So this is the Sprott physical uranium. So if you have a look at the other uranium futures, it's 70, what is it, $80 or so. I just like the Sprott physical uranium because it's a better candlesticks. Anyway, so a little bit of volatility when it comes to uranium, but you could say maybe a bit of an uptrend. Oil up 2.3% on Friday, but it's a meh. It's a big meh chart. Why are petrol prices so high? Doesn't make sense. They should be low. It's like below $60 a barrel. Anyway, gas. I was surprised by gas last week, and my surprise continues. A really good week for gas. Another good week, up 5.79%. That looks really nice. This chart, sort of a breakout. Lithium above $10 according to this. So lithium, and in fact, you can just see how lithium is going for runs just based off some of the lithium companies on the ASX. I think the tide has turned. This is Pilbara. This is actually one company I do own. I've also owned Core Lithium, and at this point in time, I wish I own a little bit more uh, lithium companies. So Core Lithium's gone on a bit of a run. Liontown Resources, this one zoomed higher as well. Yes, and there's quite a few other lithium companies. So lithium looks really, really good right now. Now, most of these companies went on a really good run. If you have a look at the weekly chart, Liontown up during the week 43.6%. Core Lithium up, got to get the right two code. Core Lithium up 37.9%, and even Pilbara is up 30.38%. In fact, let's go to my lithium watch list because there's quite a few other lithium companies. Vulcan Energy, I'm not sure this would have been up. Yeah. Novonix, NVA, all over the place. Oh, Lake Resources. Yeah, Lake Resources might have had a pretty good week, up 67.865%. Yeah, Lake Resources, chart looks like it's breaking out. And there's probably a few other ones here that I haven't got. Which one's the bigger one? Oh, that chart, Gallon Lithium looks pretty good. I like that chart. And I'm probably missing a few here. Oh, Siona. They changed the ticker code, didn't they? And I forget what they changed it to. They're probably looking pretty good. Okay. In fact, let's just Google that. Sayona Mining. Oh, ELV. ELV. Let's have a look. ELV, and maybe I can put it into my watch list. Elvra, that's right, Elvra. So let's have a look at Elvra. Well, this chart is looking pretty good as well. And I'll put this into lithium because I saw this the other day. This chart looks really good as well. That's the old Sayona. Okay, let's go back to commodities. And I think I've almost finished commodities because we've gone through lithium, coal. I do like coal. Although the chart is not looking the best, but the greatest chart anyway, but I do like coal. I got out of Coronado, but I do like a few other coal companies, some smaller coal companies. So only coal company I'm owning right now is Whitehaven. But there was a few others I did put onto my watch list. Oh yeah, two. So this one looks that's Whitehaven, and I had a look at Stanmore. This has the potential, not there just yet. And I think I mentioned this one, Terracom last week. This has the makings of a bit of a breakout after dropping a fair bit. So it's gone sideways for a while and has the potential of breaking out. So it's Terracom. So I think we need to see a little bit more strength in coal. And then Coronado released their update saying a lot of weakness in thermal coal or something. So that was one of the reasons why the share price of that company dropped. Okay. And let's tin's looking good. Nice daily chart for tin. Nickel and Palladium. Still looking pretty good, Palladium. And nice little sort of a buying situation here with Palladium. We had the run and then we had the pullback. And it looks like the pullback may have come to an end. And finally, cocoa down another 3.26%. And cocoa prices are dropping like rocks. So I fully expect chocolate prices to be going down. We know they won't, but they should. Maybe it's a time to be buying chocolate companies like Lindt, because shouldn't their margins go up? Or Hershey, even though it's a crappy chocolate, Hershey. Yeah, no movement here. This company looks really cheap. Oh no, it doesn't. For some reason, I thought this one looked really cheap. Okay, now onto crypto. Bitcoin, 95,000. Now, in saying all that, I actually did have a look at this chart recently, and it's at a nice little, you can see I put this dash line, that's the uptrend. So it's just above the 100-day moving average or the weekly average, because it's the weekly chart. And that's a nice little support line or area, or yeah, support line for Bitcoin. And Bitcoin is just above that right now at 95,000. Anyway, so this has been going on since 2023. So about 2 years we've had this uptrend for Bitcoin. This could be just a buy the dip situation. Maybe we're going to see a bit of buying coming in for Bitcoin. So still looking okay, but it needs to hold above this dash line or this uptrend line. On the other hand, Ethereum, I have no interest in these ones. A lot more volatility in this one and a lot less trends. I can't see any trends for this one at all, even on the weekly chart. In the daily chart, I think it's just, yeah, trendless. What about bonds? Bit of strength in bonds the last few weeks. Bonds going a bit of rally after looking like it was moving into a downtrend. And that's, I think the main reason behind that is less chance of interest cuts and maybe better chance of inflation or high inflation than expected. And you can actually see that in the Australian 10-year bond yield. Look at that going on a big run. And in fact, it's at a multi-month, 6-month high, the Australian government bond 10-year yield. And I think the main reason behind that is higher inflation than expected. And finally, currency, I'm not even sure why I'm looking at this anymore. Not much happening with the Australian dollar and the New Zealand dollar. Oh, look at that. Australian dollars getting some strength against the New Zealand dollar. Maybe I should have gone on holiday to New Zealand instead. There's pretty good hike in there. Okay, so what I'm going to do now is we'll go to the individual company portion of the video, go to my watch list, which is called, where is it? Where is it? Oh, it's the first one here. ASX high quality. 49 companies on this list. We'll go to the weekly chart and we'll just put in one a moving average, a 200-week moving average. Now we'll start off with a company that I have always ummed and ahed about whether this company is high quality or not. Now, just before I go any further, one of the things I did to get a list like this is I use my own judgment, but I also have a screener in Fiscal AI. I exclude mining companies and oil companies, that sort of thing, because I don't think those sort of companies can be considered high quality. And I run a screener. In fact, I call this screener high quality. I use some things as revenue growth. I need to see revenue growth, earnings per share growth, return on invested capital needs to be above a certain level. Also include free cash flow yield needs to be above 0%. Gross margins need to be above 30%. These are 5-year averages, some of these. And so what spat out was 76 companies. So we're talking about CSL, Wesfarmers, Brambles, WiseTech, REA Group, Pro Medicus. James Hardie is in this list. So a lot of these companies I would, without even doing this screener, I would consider to be high quality. Now, so, as you go further down, and some of these I maybe wouldn't. For instance, Reliance Worldwide, nah. What else? Helia Group, maybe not. Supply Network, yeah. Nanosonics, I'm not sure if I would include Nanosonics in high quality just yet. Genesis Plus, there's another case where I could say I need a little bit more time for that one. Motive AOV, I wouldn't consider that high quality. But the good thing about this is I can exclude some of these that I'm not the biggest fan of. Jumbo Interactive, Beacon Lighting. So we're getting fairly small. By the way, these all listed via market cap. Like Clinival, I wouldn't consider this high quality because they're one product company. And then as I go further down, SKS Technologies, I need more time. We need more time for that to be considered high quality. Monash IVF, I wouldn't consider that high quality. And we have Mayfield Group, Lindsay Australia, Cash Converters, no. Osco, another one, I think needs more time. Corvests, I think that's a little bit more cyclical, maybe. EZZ, SDI, so it's Atlas Pearls, no way I consider that high quality. Step One Clothing is in this list. I'm not sure I consider that high quality. Prime Financial Group. So we're getting really small companies, by the way. 39 million. Boom Logistics, no. So I have excluded quite a few companies out of my list. I also have another list, is with I have another screener which I call Rule of 10 High Quality. Unfortunately, you only get two companies on the ASX that satisfy this particular screener. 27 companies on or in America satisfy this screener, and these are the cream of the crop, in my opinion. Nvidia, Eli Lilly, Arista Network, Booking Holdings, Fortinet. So you're even getting some of those other big companies in USA not on this list. So this was a sort of I wouldn't say a better filter, but it really hones in on growth companies, companies that are growing at a significant rate that I may not have heard before. So a lot of these I never heard of before. I did this particular screener. Arista Networks, never heard of that. Fortinet, never heard of that. Monolithic Power Systems, Bio and Tech, Neurocrine Biosciences, Docs. I've heard of Doximity. And then we're getting sort of a lower companies, $4 billion market cap, Chemtech, D-Local, Callis Pharmaceuticals. So have a look at some of those companies, which I haven't just yet. Anyway, so back to my high quality, 49 companies, starting off with James Hardie. So it is in that screener, but I've always ummed and ahed about this one. But it satisfies the screener. And if you have a look at the 200-week moving average, what I'm going to do is I'm going to look at volume. There's volume. So I like to have a look at the last 10 years. And if you have a look at the last 10 years on the weekly chart for James Hardie, there are signs this is high quality. So you could just have a look at charts and decide whether or not the company is high quality. Now, saying all that, on occasion, the share price of this company does drop significantly below the 200-week moving average. It's done it 4 times in the past 6 years. And right now, it's well below it. It's also at support level. So there's a really good support zone at about 25, we'll just say $25. So we'll say between $22 and $26. There's a nice support zone, and the share price of James Hardie is right at that zone. So if you do consider this company to be high quality, there could be some good buying right now for James Hardie. Share price has more than halved since 2024, March 2024. So in the last, 18 months, share price has more than halved. But there's a lot of negative sentiment in this company right now. But that's when you buy these sort of companies, these high quality companies, if it is high quality, is when the negative sentiment is driving the share price well below fair value or good value. So James Hardie is one I'm just umming and ahhing about. Is this high quality? Goodman Group, you can see Goodman Group. This has the makings of a high quality company just based off this chart. If you go back to 2015, very rarely does it hit the 200-week moving average. It's getting very close right now. Getting very close. It got there in April, very briefly. So it's getting there or getting close right now. Not there just yet. People might be surprised. I would consider Fiducian Group to be high quality, but the chart backs it up. It goes back to 2015, and this is the chart of a high quality company. So that's all I'm going to say. I do own this one. Share price is well above the 200-week moving average right now, but we have seen a little bit of sideways movement in the share price. Soul Patts. By the way, these are not listed in any order. Soul Patts, a lot of interest in this company. And Just like what was it? There was an indice. I say it's well above the 200-week moving average, and you actually see that with Sol Patterson. On occasion, there's a little bit too much interest in this company. We saw that in 2018, 2021, and we saw that recently where the share price gets well above the 200-week moving average. That is not the time to buy, and then the share price dips below the 200-week moving average. So, will this be third time in a row that's happened, where we've seen like sentiment shift so widely, the company goes from being maybe widely overvalued to really good value. So this was last good buying back in June 2022. So maybe we're moving towards that right now. Still a long way to go for Sol Pats. What else? ResMed. This is a great one. ResMed. So this is the only time I ever thought about buying ResMed was during that Ozempic panic, and the share price fell below this just shows you the opportunity you can get if you just pay attention. And I bought ResMed at 23.87, as did a lot of people out there, a lot of fund managers. I'm not sure who was selling because it seems like everyone was buying back at that point. And the share price is now well above, well, maybe not well above, but yeah, that was good. That was the sort of thing we need to be looking for as investors when the market overreacts, and the market did it in this occasion. Cochlear is a really interesting one. I always consider Cochlear to be widely overvalued, but if you have a look at this, share price is right near the 200-week moving average. Even now, I consider it to be overvalued. P ratio is like 50, 46.7. But it seems like Cochlear is always overvalued based off this, and it's getting close to being good buying, maybe just based off share price is very close. And when the share price drops below 200-week moving average, it doesn't stay below for very long, but it does it quite often. So it's done it one, two, three, four, five, 6 times in the past 5 years. Now, but prior to that, it very rarely did it. And there was a time back in 2013, 14 when the share price was well above or well below the 200-week moving average. And that's because of someone I work with did a paper on it. Something bad went on with Cochlear. Maybe it was a product recall, I forget. That would have been good buying as well. CSL, I think this is good buying for CSL. I think this is the market overreacting. One of the reasons there's a bit of weakness in CSL is because of the growing anti-vax movement in the United States, which will come to an end eventually because, well, it will come to an end, but anti-vax movement is stupidest move. All you have to do is send these people to a cemetery and just see all the kids that died prior to vaccines, or just mount. It was like that stupid comedian, if you can call him that, who said, when I was a kid, there was no hospitals. There was no need for child hospitals. Well, there was children hospitals, and a lot of kids died. All you have to do is look at child mortality rates. A lot of kids died because there was a lot of diseases that we had no vaccine or cure for, and all those diseases have gone bye-bye now because of vaccines. Anyway, so who was that? It was that stupid comedian who's just I can't even think of his name because he's lost relevance. Anyway, so that's one of the reasons of the weakness in CSL, and I do think the market is possibly overreacting because CSL is still growing. CSL is still growing. Maybe not as much growth as in the past, but we might look back in 10 years' time saying this was prime buying for CSL. Now, in saying that, I have not added to my position in CSL. Pro Medicus. So when I bought Pro Medicus at 55.25, I thought, oh man, this is expensive. Share price has gone up fourfold since then. And the share price of Pro Medicus has only once hit the 200-week moving average. And I'm being kind saying that. It got very close during COVID-19. And the last time it got close to 200-week moving average was when no one knew existed. And that was in October 2013. So this sort of rule for Pro Medicus, I think you have to be a little bit, if it approaches the 200-week moving average. Now, in saying that, valuation, that's all you need to say about Pro Medicus. Technology One, another case where the share price is well above the 200-week moving average, but another case where the share price very rarely gets there. It did back in June 2018 for a brief period. That was good buying for Technology One. Not there yet. I still think this is a little bit overvalued. Objective Corp. Someone in an article said no one or something like 99% of investors on the ASX have never heard of this company. I was like, what are these investors looking at? Everyone should have heard of this company because this is one of those growth companies that everyone should know about. That's just my opinion. If you've never heard of this company, then what are you doing? Anyway, so this was me buying, always wanted to buy, well, maybe not always. I first discovered this probably 2015, 16. And finally, we got some good buying back in late 2023, 2024. And that's when I finally bought it. Finally bought it. So a little bit above the 200 week moving average now, but nice uptrend for that company. So we have Data3, Hub, WiseTech. This one could be good buying right now, just based off where the share price is and the 200-week moving average. I think a lot of negative sentiment in this company has driven the share price even further below the 200-week moving average. Again, maybe you could say valuation, but a nice growth company. Well, they've had some troubling. Was it insider trading the last thing that's been going wrong with WiseTech? I don't know. Zero, I think this is getting close to being a buy, if not there now. Share price has dropped below the 200-week moving average. Car Group, a company I don't think I've ever owned before. So keep an eye on this one. There was some good buying not that long ago in April. I'm very close to trading this, and then I realized, no, I shouldn't trade this. I just own it. And the 200-week moving average has been acting as a nice little buy level for a long time, and it's getting close. It's getting close. So this could be good buying. So these little bit of a drops, this period where we've seen tech companies pull back a fair bit, this could be leading to some opportunities. REA Group, this is another one getting very close. And don't listen to Scott Phillips, who said the P/E ratio of this company is 100. It's not. It's actually below 50. They were looking at last year's profit, and the profit actually more than doubled because last year there was a one-off. This year there was a one-off as well. So actually made the profit look better than expected. So I think a true P/E ratio may be 50, which is not too stretched for this company that is still growing at a nice rate. We also have Breville, SGH, Reese, which Steadfast is another one where the share price has just reached the 200-week moving average. Doesn't do it all that often. The last time was in the COVID-19. We have IFT. So I do consider this to be high quality just based off the chart. And the reason I say that, only twice since 2019 has the share price hit the 200-week moving average, and both times we saw the share price rally. Wesfarmers, probably overvaluation for this one. That's my main concern about Wesfarmers. If the share price drops, say, yeah, 200-week moving average, maybe that could be good buying. What else we have? Ventia, Levisa. And then we get to some companies I added recently, Brambles, which I never would have considered high quality, but I think I have to change my opinion. One of the reasons I probably never would have considered this high quality is you have a look at this chart right now. Share price went sideways for the longest time. And now maybe it's high quality. I probably put Brambles alongside James Hardie in terms of quality. I think maybe it's there, maybe, but I'm not convinced. But even if I am convinced, I don't think this is good buying at these levels. What else? Yeah, I did include Reliance Worldwide, Codan, Super Retail Group. We also have ARB. And funny enough, ARB is below the 200-week moving average, but always when I look at the P ratio of this company, I go, not, it seems a little bit too high. We have Nick Scali, Mass Group, which we just started the 200-week moving average. Supply Network. I have included Genus Plus. And if you have a look at Supply Network, it's right for a pullback. Now, in saying that, share price has been above the 200-week moving average since the COVID-19, and then it just sort of hit it and went sideways. So this chart is a chart of a high quality company. The share price has been above the 200-week moving average since June 2010. It's a long time. But I think there was a little bit too much excitement. Share price sort of pulled away, and now we're getting sort of the expected pullback. Journeys Plus, this is one I am trading, and the share price has gone bonkers, just going bonkers. I'm waiting for a pullback, waiting for it to maybe take profits, but there's just no sign. We also have Australian Ethical, Universal Stores, which is at the 200-week moving average. Oh, no, that's daily. I'm going to say, it hasn't been around that long. Beacon Lighting, EQT. Look at that. Sort of looks similar to COVID-19. I have no idea what EQT is, but it's in my list. Energy One, a little bit too much excitement about this company, a little bit too much hype. Cog Financials, XRF. In fact, this is a high quality company based off this. Although my main concerns about XRF is they are a little bit more cyclical than what you would like. And if we do see a massive down cycle in mining, this would be affected. And we also have Pacific Current, which I don't know much about. They're a fund manager or LIC or something like that. Okay, so hopefully you did find some good buying in this list of 49 companies. Did not go through all of them, but yeah, this is my list of 49 high quality companies on the ASX. I'll probably adjust this through time, maybe include a few smaller companies, get rid of some of these companies I may not consider high quality, like Reliance Worldwide. Think about James Hardie, Brambles, those sort of things. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.